Okay, can we begin now? I'll wait a bit longer. Okay, great. So, let's, now the presentation is bigger, it'll be easier to see. The title is A Week to Remember in November. This week is packed with big events, and quite a few currencies are at crossroads. I'm Yohay Elam of ForexCrunch. Very quick introduction about myself. I used to be a retail trader and a computer programmer. I founded ForexCrunch back in 2008. The focus of the site is on fundamental analysis of the market, but I always spice in some technical analysis. It's, as I see it, it's always good for entry points, but what moves markets are fundamentals. So we're going to talk about why this week is important. Look at the calendar, then we'll go past currency by currency, starting with the US dollar, the fall and the rise, then the euro, the ECB decision and also look at the euro-dollar chart. It broke long-term uptrend support. We'll talk briefly about the Japanese yen. There are no big events, but there are interesting patterns on the charts. And then we'll talk about all the other currencies, the pound, the Canadian dollar, Australian dollar, and the New Zealand dollar. Of course, the focus is on the first two. Okay, why is this an important week? Here's the snapshot I took from the FX Rate calendar that I host on ForexCrunch. The first week of the month is always very busy. There are very big events. In addition, this week also features the first release of US GDP for the third quarter. This happens only once a quarter, not always in the first week of the month. Another thing is we have the non-farm payrolls, which were supposed to be last week, but they were pushed back due to the government shutdown. We have 3 rate decisions, the European one, the most important one, 4 employment reports, and of course the non-farm payrolls is the most important one. And we have currencies at crossroads. So a quick overview of the calendar. Tonight here I'm speaking from Barcelona. It's the early morning for me. The Australian rate decision. All times, by the way, are at GMT. So we have the Australian rate decision. UK services PMI, which we saw the PMIs move the pound. Then the first hint for the non-farm payrolls, the ISM non-manufacturing PMI, and the rate decision, the quarterly job figures in New Zealand for those of you trading the Kiwi. Thursday is a very big day. Begins very early with the Australian job data. Then the UK rate decision, and of course, we're going to have a very busy 2 hours with the ECB rate decision in the Eurozone. And then, just as Mario Draghi begins talking, we'll have a release of the US GDP and jobless claims. And to finish the day, Draghi will have a chance to speak once again and maybe release some interesting comments or correct himself after saying something he didn't intend to in the press conference. On Friday, we have Australian monetary policy statement. Of course, the big non-farm payrolls, together with the Canadian job figures. It's chaotic for those trading dollar CAD. And just before the weekends, November 9th talks. Of course, there are many more events. You're welcome to look at economic calendars. These are really very big ones. So let's talk about the US dollar. The US dollar experienced a big fall on September 18th. Ben Bernanke and his colleagues surprised us with deciding not to taper bond buys. Well, I was surprised. Some analysts did see it coming. And then the US government shut down on October 1st. If you remember, there was also a debacle over the debt ceiling. They reached an agreement only at the last moment, just a few hours before the deadline of the debt ceiling was about to expire. And they only decided about postponing the crisis to 3 months forward. So after this resolution of the political crisis in the US, the dollar continued falling. After the crisis was resolved, we had the non-farm payrolls for September. It was a little bit below expectations, but it triggered another big fall of the US dollar. This changed only last week. And in addition to this poor non-farm payrolls, we also had other weak data. The dollar has been on the back foot. The reaction wasn't equal between all currencies, but we did see it suffering all around. And then it all changed last week. We had the rate decision in the US. It was supposed to be a non-event because there was no press conference, and after the US government shutdown, nobody expected Bernanke and Federal Reserve to do anything. But it was a bit hawkish, or at least not too dovish. The Fed didn't propose a new timeline for tapering, and it also omitted the phrase about tighter financial conditions. So it was relatively optimistic, or not too bearish because of the government shutdown. In addition, some data points improved. Wasn't the ADP, which was weak, but the Chicago PMI. And the US, the ISM manufacturing PMI on Friday. And in addition, the same Friday, just 3 days ago, James Bullard of the Federal Reserve, which is a very talkative member, he released some hawkish statement. He did leave the door open to tapering in December, for example. So the US dollar recovered strongly. The reaction was stronger against the euro. We'll talk about the euro separately. But all in all, the dollar is making a real comeback so far. So we have the critical data this week, the non-manufacturing PMI. The U.S. economy is mostly oriented towards services, so this is much more important than the manufacturing PMI. Supposed to expect it only to slide from 54 to 54 points. And it's important to note the employment component, which is a hint for the non-farm payrolls. GDP, it's the first release, always has the biggest impact. It'll overshadow the jobless claims for sure. It needs to be a strong release because Q4 is expected to be weak because of the U.S. government shutdown. In addition, so far the projections of the central bank, the FOMC, Ben Bernanke, were quite positive, quite optimistic. And they expected again some kind of big recovery in the last quarter. So if Q4 is going to be weak, we need a strong Q3 in order to counter that. The official expectations are about 2% on an annual basis. And of course, the last big event of the week is the non-farm payrolls. They're expected to be weaker than in previous months, around 138,000. But we might have a distortion of the data because of the U.S. government shutdown. We know that the private sector hasn't been as strong as in previous months, but we have no idea about the public sector. How are all the workers that didn't show up for work because of the shutdown, or furloughed workers, how are they going to be counted? How is it going to affect the data? Was the data collection correct or incorrect? So it's going to be quite a mess. I think official expectations are for 130K. I think it'll be even lower. If it'll be extremely low or even negative, something we cannot rule out, markets are going to look at it a bit suspiciously as a temporary weakness, temporary distortion. So it could go negative. It could trigger an immediate crash of the dollar, but then the dollar could bounce back on the doubts about the data. In any case, it's, as always, a huge event, non-farm payrolls. It's important to trade with care and be careful. Usually the initial reaction isn't the real one, so be very careful. Okay, more about in the longer term of the US dollar. All in all, non-farm payrolls is accompanied by the unemployment rate. Unemployment rate has been falling. Yes, it's because of the lower participation rate, which has returned to levels last seen in 1978. The world has changed quite a lot since then. But it's still 7.2% in the last report. It's not too far from the 6.5% that the Fed is targeting for the end of low rates. And eventually people might begin looking at the fall in the participation rate, not as depression in the United States, but rather a structural change. So if the unemployment rate stays lower for longer, it could be positive for the US dollar. Another long-term thing I mentioned before, some dates for the U.S. Political mess. On December 15th, leaders of both parties were supposed to reach some kind of agreement about a budget. I guess this deadline will be missed. It's not a real deadline. On January 15th, the government is due to shut down once again, just after the holidays. So I'm not sure they can avoid another shutdown. And then February 7th, the debt ceiling is expected to be met once again. Perhaps the U.S. Treasury can do some extraordinary measures and play with the dates a bit, but we don't know. So this is a cloud above the U.S. dollar. Okay, let's move to the euro. What happened in the dollar is sort of the opposite to what happened in the euro during the same period of time. The good news came for the second quarter. During the third one, the Eurozone got out of the recession finally. Spain, where I'm living, exited the recession in the third quarter. PMIs, purchasing managers indexes, were on the rise. German business sentiment was on the rise. The higher yields in peripheral countries, together with the backstop of the ECB, promising to support these yields, attracted investors. So we found money pouring into the Eurozone. And when the U.S. government was shut down and there was fear that the U.S. would default, the second most liquid currency is the euro. So even if the euro falls in times of fear, global fear, in this case, when the reserve currency of the world, the U.S. dollar, became dangerous, flows came into the euro as well. But things changed last week, especially. There's the biggest thing on the agenda is the fear of deflation. Why is deflation bad? I mean, if prices are falling, it's good for the consumer, isn't it? Well, if prices fall, consumers buy less. If consumers buy less, manufacturers produce less, and then they don't hire people but fire them. So there's less money, and it could turn into a vicious cycle where prices fall, people buy less, the economy squeezes. This is something that Japan has been suffering for about 20 years now. They're fighting it quite vigorously, with some success so far, and it's important to remember that QE2, not the current round, but the one that started in November 2010 in the US, was because of the fear of deflation and falling prices. So the ECB's target is 2% or a bit below. The recent numbers that came out on Thursday showed only 0.7 year-on-year inflation. That's very far from the target that was expected to be about 1.1%. Also, German inflation is falling. The ECB is sometimes blamed, and sometimes correctly, for focusing only on Germany. So if also German prices are falling, the ECB might act. Here in Spain, prices year on year have begun falling. I mean, Spain is much closer to a scenario of deflation. In addition, the strong euro, the honeymoon I talked about beforehand, is hurting exporters everywhere. So European exports become less attractive, and the Eurozone suffers because of the strength of the currency. In addition, there's a squeeze in money supply, and Germany still doesn't have a government. Money supply means less money in circulation. Germany had elections back in September 22nd, 6 weeks ago, still doesn't have a government. And the most recent German business sentiment figure from IFO was falling. So it's more bad news for the Eurozone recently. So the big question is, what will Mario Draghi and the ECB do on Thursday? On one hand, we have falling inflation, danger of deflation, high euro, and the need to act. On the other hand, the ECB usually moves slowly. There's German influence that fears inflation and policy that is sometimes focused on Germany. And in addition, the ECB usually provides hints before acting. So I'm not sure they want to be seen as acting out of impulse. So there are better chances that the ECB will hint about action and not take it. It means make it clear that they're going to cut rates next month, but not this month. Or introduce a new LTRO. So what's an LTRO? It's the ECB that 2 years ago began its first operation, and 2 months later the second operation of lending very cheap money to banks. So there will be more liquidity. There would be more liquidity in the system, and so they could also buy bonds of peripheral countries like Spain and Italy, which had a higher yield. So this policy was supposed to, well, it did have some positive impact, but they were loans for 3 years. About 2 years passed, and the ECB might inject more money. It's some kind of indirect fee. Yet again, there are better chances that it'll wait. So what are the scenarios? I've detailed about it on Forex Grant much more, but here are the main scenarios. If the ECB only hints about doing something next time, the euro could recover. It fell quite a lot, 320 pips last week. If it does cut the main lending rate, that's half percent right now, the euro could slide. It's not fully priced in, so the euro probably fall quite a bit, but not plunge. If it cuts the deposit rate, then the euro could free fall. The deposit rate is what the ECB pays banks to deposit money with the ECB. It now stands at 0%. If it cuts it to a negative rate, the trigger outflows out of the eurozone. It's considered the nuclear weapon, the nuclear option. The ECB already talked about doing it in the past. They said they're technically ready, but they never really acted. If they do move on this now, it'll be a big surprise, and the euro will free fall towards 130 or more. In addition, Mario Draghi already talked about the interest rate, the exchange rate of the euro last month. It was very subtle this time. Also, we're not expected to see something like that because the value of euro dollar fell, and the ECB tries to refrain from talking about the exchange rate directly. Okay, now let's look at the charts. Where's the chart? Chart disappeared. Okay. I think I have the chart right here at the beginning. Let's see. Well, here at the beginning, I hope you can see that. On the right bottom corner, we have a chart of euro dollar and the daily chart. We can see that there is this uptrend support from June. It was resistance at the beginning, and then euro dollar broke above it and maintained and kept on trading above the line. And later on in October, it even shot up to 138 and got away from the line. And just before the weekend, it dipped below the line. We're still waiting for confirmation. This week, euro dollar began trading quite slowly, but it all depends on Draghi if if the break will be confirmed. The next levels, flat levels to watch are above, I made this presentation before current levels were traded in. It's 135, which is now what we're seeing. 135.70 is an important level, 136.50 on the upside if we don't get action from the ECB. On the downside, 134.60 is weak support, 134.15, and if the euro falls sharply, it's 133.25. Of course, if the deposit rate is cut to a negative rate, 130 isn't impossible. Okay, let's move on to the British pound. Beforehand, the British cable shot up from 148 to 162 on good data, and the good data continues. Even today, we saw high construction PMI. Tomorrow, we have the services PMI. Last week, The manufacturing PMI GDP was strong in the third quarter with a rise of 0.8%. We're seeing good data all around, but in addition, there's no new QE planned. The Bank of England had a pound printing program. It still exists, but the head of the Bank of England, Mark Carney, said he doesn't see a case for more QE in the future. In addition, in the recent report from the Bank of England, they sort of hinted they wanted a stronger pound, contrary to many other countries. We'll talk about them later. A strong, and also the euro. A strong pound helps fight against inflation. There is relatively high inflation in the UK, and a weak pound doesn't help exporters too much. But despite all the good news from the UK, the strong growth, consistent, solid, forward-looking, backward-looking in recent months, cable was stuck, and pound-dollar was stuck. The pair count get higher. The Eurozone weakness, which we're now seeing, can affect the UK as well because it's one of the biggest trade partner for the UK. It's important to watch the services PMI I mentioned before. It's going to be published tomorrow. And it's even more important than the ECB than the rate decision in the UK because the rate decision in the UK is published just 45 minutes before the European rate decision, and the rate decision in the UK is usually a quiet event. This time, because the ECB event is a critical one, the rate decision in the UK will probably be overshadowed. Okay, here we have a nice chart. Hope you can see it. So there is an uptrend support line which is much steeper than euro dollar. You see all the rise from June until somewhere in mid-October, and then we saw the pound dollar trading in range. It already dipped once at the beginning of October below this line, and then made another move towards 162.60, which is a double top, and then broke below this line much more decisively. I think today it's recovering a bit, but the lines to watch are 160 on the top side, 161.20, and then 162.50 or 160.60. On the downside, it's 158.90. So far, the pair escaped this line, and then 158.30 and 157.20. In my opinion, the pound has all the good reasons to continue rising. It took a break, some consolidation, but I think that once the dust settles over other events, it can resume its rise. Okay, let's move to another major pair. Yen, the safe haven of choice. No big events are planned or scheduled this week. The dollar yen is very sensitive to US data, and it works as a as a safe haven currency, like risk. If the ECB decision in the Eurozone is very frightening, the yen could strengthen. And it has an interesting chart pattern. Nice triangles. No matter how you look at it, the dollar yen chart, we see that the trading range has been narrowing into this triangle. And where will it break? I think it'll break to the upside. I think Japan wants a weaker yen. U.S. economy is still growing despite all the political mess, and I think it'll resume its rises. It might break from the triangle this week, maybe next week. Anyway, it's usually when these triangles are seen, we have an explosion later on. Lines above are 99, 99.60, and 100. Of course, the round number, which is not so much of a technical line, but of course it's another digit. And then 160. On the downside, we have 98.20, 97, 96.50, and 95.80. So while there aren't big events here, could be traded with non-farm payrolls or with the US GDP and might explode out of this triangle. Okay, we'll move to commodity currencies. Canadian dollar, a few bad things that are going on now. It suffered from the US government shutdown. Canada depends on demand from the United States. So suffering for the US economy is suffering for the Canadian economy. In addition, the Bank of Canada removed the hawkish bias. It no longer sees a rate hike. It's more neutral now. This really hurt the Canadian dollar. There are worries about household debt, especially a bubble. It's a southern neighbor experience. And Canadian oil, Canada is a big supporter of oil, is sold at a huge discount because of the lack of refineries and pipes. So these are reasons to sell the loonie, but there are also good reasons to buy the Canadian dollar. GDP for August was strong. Unemployment rate is only 6.9, and there is a high participation rate in Canada, very different than in the US. And of course, as I mentioned before, Canada reports its employment data at the exact same time as the US releases its non-farm payrolls. Good figures in both events will be good for the Canadian dollar, and weak ones in both will be bad for the Canadian dollar. So if we have strong non-farm payrolls and the weak Canadian jobs report, you might think the dollar CAD is going to shoot up, but no, it's going to be mixed. Canada needs strong US non-farm payrolls. And the Canadian dollar also held up well in the dollar storm. Don't have a chart for the loonie, sorry. We're going to move on to the Aussie. Quite a popular pair. Recently it hasn't been behaving so nicely, but it's very interesting. So, Australia enjoyed the no taper decision back in December in the US. This helped the Australian dollar make a huge recovery. It regained about 50% of its losses. The Reserve Bank of Australia isn't seen as cutting the interest rates tonight. However, it does want a lower exchange rate. One thing to note is that Australian Central Bank has a rate decision every month, apart from January. So if they want to, I don't think they'll do anything special in December, just before they go on. Everybody goes on vacation. So there is some chance that they will say something now, give some forward guidance, some hints about future rate cuts or something. And the RBA also surprises us many times. So, while a rate cut isn't expected, maybe some big announcement could be seen. Later on, we have the employment numbers. Employment in Australia is quite good in comparison to other countries, but it's weakening. The mining sector is probably over the hill already, and other sectors of the economy aren't doing so well. The volatility in this pair is on the rise and could be quite interesting. Here's the chart. Okay, contrary to the euro and the pound, we also have here, similar to the euro and the pound, we have uptrend support here, but so far, the pair hasn't broken below the line. This is daily charts. On the upside, we have 95.30, 96.10, 97, and 97.60. On the downside, the round number of 94, and then 93.50 and 92.85. I think the Australian dollar might have already completed its correction, and it has some potential to fall. It's important to note the uptrend support line, and of course the data from the US and Australia, needless to say. Okay, let's move on. The last currency we have here, the Kiwi. I don't know how many of you trade the Kiwi. I think it's an interesting currency pair. The Reserve Bank of New Zealand, central bank, wants a lower New Zealand dollar. And sometimes it gets what it wants, not always. The Kiwi has been sensitive to paper talk, in the US. But there are reasons to be bullish on the Kiwi. Economy is doing quite well. This is what everybody forecasts, government, central bank, many analysts. New Zealand exports food, milk, meat, maybe other things that I don't know exactly what but the people need to eat. So the food exports are less sensitive to global demand. It's not like iron or copper. There's foreign investment pouring in many fields. Immigration, for quite a few years, people left New Zealand. The immigration picture has improved now. And RBNZ, the central bank, did say explicitly it will hike the interest rates. In addition, the housing sector is moving forward thanks to foreign investment, thanks to other things. The central bank fears of a bubble, but in the meantime, birth of the bubble doesn't seem that close. So there are many reasons to be bullish on the Kiwi. The chart says otherwise, but let's see. It's been quite a ride, the chart for the last 3 months. So Kiwi dollar has been trading in an upward in the channel. It did make some violent move. Now it's a bit below. It's below this upper support line, but I don't think it's such a strong line and it's still telling. I think the Kiwi does have room to rise. Lines above are 83.60, 84.35, and 85. The downside, that's a mistake. It should be 82.30, 81.60, and 81. Of course, the round number of 80 is also important. So the Kiwi lost the channel, but it's still fighting. Okay, we're close to the end of the main part, and just before we move to the Q&A, I'll conclude. It's a very busy week. We already had huge volatility last week, and I think we'll have high volatility in the markets after Christmas. There's a Fed decision in December, on December 18th, a week before Christmas. Up to last week's statement, everybody thought that tapering would be postponed to March or April or whenever, but the jury is still out. We can still have a tapering decision in December. And also in the upcoming week, which we talked about just now, there are lots of opportunities, lots of risks, lots of movements in the market. In the markets, yes, Monday began a bit slow, but I think it's going to get very busy from tomorrow. And Thursday and Friday are going to be very energetic. So trade with a lot of care when volatility is higher. Keep your leverage a bit lower, just in case. And okay, now we'll move to the questions. How we think currencies will end the week. Other questions, whatever you want. I'm here. Let's see what you've already asked. Okay, buy Aussie for tomorrow, RBA. I'm not so certain that the RBA is going to announce something Aussie positive. I think it is going to mention weak interest rates. I think it's going to mention that the Australian exchange rate of the Australian dollar is a bit too high, but it could express some optimism about the economy. For instance, building approvals have improved. I see the Australian dollar is falling, but specifically about the rate decision, I'm not so sure. Laughing. Odd NZD. Well, in my opinion, odd NZD has room to fall because I'm relatively bearish on the Australian dollar and bullish on the Kiwi. So it has room. The Aussie Kiwi has room to fall. A lot depends on the data. I'm not sure I mentioned. I did mention data in New Zealand this week. Employment data is critical. New Zealand releases employment figures only once per quarter, making it much more important than neutral. So we have also employment data in Australia. So both will be critical to the next moves of this cross. Euro-dollar outlook until December. I'm bearish, but I tend to be bearish on Euro-dollar and sometimes too much. I did make a very nice move higher. But as I see it here in Europe, the situation hasn't really improved. Nothing has been solved. In the US situation isn't much better. Sorry, especially with the politicians they have over there. But US economy is still growing. Europe is still not out of the woods. And I think with the falling inflation, the ECB is going to push the euro a bit lower, indirectly, not directly, but that's how I see it. Thank you very much. Euro CAD and well, about pound dollar, I think it's going to stay in range this week, but in general I see it going up. About Euro CAD, I think it's going to fall. I'm a bit more bullish on the Canadian dollar and more bearish on the euro. So I see this cross as falling. I must say I'm not familiar with the technicals of Euro CAD. So, but if we look at the fundamentals, I see Euro CAD is falling, and pound dollar is staying in range, and perhaps later on breaking above 163, 163.80. Data has been favorable in the UK. Let's see if I can show you the full euro-dollar chart. Can you see the big chart on the screen now, or instead of the slides, or let me see if I can. No. Okay. Let's try something else. I think it's a nice chart. Okay, this was a good idea. Okay. Can you see the big chart now? Yes, great. Okay, I think maybe now it'll be easier to understand what I talked about beforehand. But this screenshot was taken late on Friday, and the pair is currently trading at just above the line. So as I said, the break hasn't been confirmed, but this is a very interesting line to watch. Because euro-dollar held very well above this line back in September. And then it fell again to the line in early October, but shot up since then, went above 138, traded along very steep uptrend support line, much steeper than the thick line. And when it broke down flying colors, lost about 320 pips. I think the battle over the line is still fought, and it'll be interesting to see. Euro-dollar has been behaving better in recent months. I mean, it's a bit more predictable than it used to be. It's trading in better ranges, but it's not always the best pair to trade. It has sometimes too many moving parts. Oh, sorry, I see some moves talking. Let's see if I missed a question here. Could GBPUSD fall down next 2 days? I can see kind of double top in the daily chart. Where's the daily chart? Double top on the daily chart. It means somewhere just under 160, 161, sorry, around 160.80. Is that what you're referring to? That could be a double top on the daily chart. Traded, didn't break above. So I'm not so sure. Well, if we have strong GDP in the US and strong non-farm payrolls, pound dollar could fall further. But I see the general direction as being upwards. It had a period of consolidation, and I think it's ready to move on. I think recover today a bit. 160 is certainly a barrier there. But I don't think it'll move too much. I don't think it'll break 162.60, which is the double top I mentioned, seen in September and in October. I don't think it'll happen this week. If you have any more questions, you're welcome. So you're welcome to join the newsletters. Visit the site at forex.com. I'm available also by email. Yohay at forex.com, and the Twitter handle is at ForexCrunch. A few months ago, I launched mobile apps for Android and for iOS. New versions are released frequently, and welcome to download, view, and rate them. Thank you very much, FX Trade. As always, it's an honor to be hosted on this big and interesting website. Good collaboration with everybody there. Thank you very much. Well, if there aren't any more questions, we'll wrap it up. All the contact details are here, just in case. Thank you very much. Safe trading, everybody. Thursday at 1:30 p.m. GMT is a very, very interesting hour, especially on euro dollar. Will be interesting. And the same hour again on Friday. So trade with care. I'll just mention that a recording of this webinar will be available as always on fxtrade.com. Yep. You can now see the link. The recording will be available. Okay, thank you very much, everybody, once again. Thank you for being here. Thank you, FX Crete, as always. Visit Forex Crunch. Thank you very much. And see you next time. And goodbye. Ciao, ciao, adios.